Hey everyone, it's once again time to unveil my entire portfolio from A to Z. I know you love these videos, so this is episode or update number 15. If you're new to the channel, welcome. My mission, the mission of this channel is to help everyday, regular, ordinary people to invest on their own, right? Do-it-yourself investing in order to build their own stream of passive income to enhance their quality of life and when they become financially independent. But instead of just talking about it, I actually show you how I did it because we are living the dream right now since December 2019. That's when we became financially independent. So if you're watching this video, make sure you're watching the most recent and most updated portfolio Unveiled video. This is episode or update number 15 for June 2022. I have a YouTube playlist dedicated to all my portfolio Unveiled videos, so you could follow my journey or my portfolio journey, which I share with the whole world usually once a month. So if you invest on the Canadian or the American stock market and you like this type of content, if you're thinking about investing on your own or already doing so, if financial independence is important to you or generating a passive income, please consider subscribing to my channel because the income style investing is, in my opinion, the fastest way to financial independence. So just a quick summary, everyone, of my investing strategy, style, and a few important reminders before I show you everything. First of all, I'm Canadian, so the funds in my tax-free savings account or my TFSA and my regular cash account are all Canadian listed funds. There are funds on the Canadian stock market, the TSX. But don't exit the video if you're American or invest on the US stock market, because for our retirement accounts, my wife's and I's, our RRSP accounts, we invest mostly on the US stock market. So this is simply because as Canadians, there's no additional withholding taxes on the income, but that's only specifically in the retirement account. That's why we go with primarily US funds there. So stick around if you're American, because I'm always going to show my my RRSP portfolio first, my retirement portfolio first, so you'll see my US listed funds. So a quick note about my investing style real quick here. I am a long-term buy and hold income focused or income oriented investor. So the primary objective of this strategy is to generate high and consistent passive income via dividends and distributions every single month as consistently and safely as possible. So most, if not all, my returns, everyone, does not come from capital appreciation or stock price increase. It comes from the passive income that my portfolio generates. So I know this is a hard concept for people to understand because the growth strategy or capital appreciation is all you hear about. But there is another way to make money in the stock market where you don't have to buy low and sell high. It's my way, the income way. So how do I achieve this in a safe manner? Well, my portfolio primarily holds funds that invest in blue chip dividend paying stocks and that use income enhancing strategies like covered calls and leverage. Notice funds. I don't invest in single stocks or single companies anymore. So these funds provide a relatively consistent income, and the intent is really to hold them, not to sell them later on at a higher price, but really to collect the passive income forever. So this strategy enabled my wife and I to become financially independent in our mid-30s back in December 2019. You could always check out our financial freedom journey video if you want to see our whole journey. So my strategy might not be fun, exciting, or mainstream, but I promise you it works. You just got to stay focused and disciplined. And keep in mind that I am not against the mainstream growth strategy or the dividend growth strategy. So whether it's growth, income like I do, or dividend growth, which is kind of in the middle, they all work long term as long as you have that long term investment horizon. This is not a trading investing channel. This is an investing channel. Very different. So what will I show you in this video? As usual, I will show you my 6 accounts, right? My 2 retirement, 2 TFSA, 2 cash accounts directly in our broker, just so you could see that what I'm saying is legit. And then I'll show you my entire portfolio and spreadsheet, so it's much easier to digest and see it. I'll go through each holding one by one. I'll show you what any changes, if any, I made from last portfolio unveil. And remember that you could download the spreadsheet of my entire portfolio and follow along in case it's too small right there on my website, passiveincomeinvesting.ca. If you go to free tools and resources, it will be the very first download. So without further ado, let's check out my entire portfolio together. All right, everyone. So starting with my accounts first, we'll go through them one by one really quickly so I could show you the value. I'm not going to show you the holdings here, but I'm going to show you those in the spreadsheet. I am down, overall. Well, actually, I'm not overall. Down overall. I'll give you the numbers in a second here. But we'll go through, you'll be able to see my book prices in case you're curious in the spreadsheets. Okay, so like I explained in my second Panama video or previously, for our TFSAs, our RRSPs, and my Lira, it's all with Questrade. The only thing we have left with TD is our cash accounts, our non-registered accounts. So here is the total value of my TD portfolio, which is basically just the cash account. And here is the total value of my Questrade account here, 259, almost 260,000. That is my combination of my RRSP, my TFSA, and my Lira account. So now let's check out Erica's accounts. All right, so Erica's cash account is here still with TD. The rest is with Questrade. So the value is 124.4. So this is the cash account, and for her TFSA and RRSP, it is with Questrade. Here it is, total value is 256. So if you add them all up, the total value presently of my portfolio, something I really don't care about. It fluctuates every day with the stock market. As an income investor, this is, you really not supposed to care about this. I certainly don't. Like I keep saying, but the total value is about 913,000, so a lot lower than the last portfolio update, which was 1 million. That is simply because the market is going down. We're going through what I like to call a general sell-off, where nothing makes sense. People are just dumping stocks because of fear, because of inflation fears, etc. I'm not going to get into that. I think it's all nonsense, but hey, people want to sell their stuff. I don't care. It doesn't make much of a difference to me. So these are the accounts. Now let's go through everything in the spreadsheets. All right, so we will start with the RRSP account. So if it's too small, I apologize. You could always download the Excel sheet to follow along on my website, like I mentioned earlier. So for our RRSP accounts, these are retirement accounts, right, everyone? So nothing is coming out of these accounts. Nothing is, no income is being extracted. Of course, this is only going to start happening probably when we turn 55 or maybe 65 or at the very least 71, right? That's when you have to start taking it out. So just a quick note that Erica's RRSP is on drip. My Lira is on drip, which only has the Bitcoin ETF. And my RRSP account is the only account out of the RRSPs that is not on drip. So what I do is I manually reinvest the income every single month. So I'm almost at 2,500 US. So I usually wait until I have 2,500. And then I buy something else. So I buy in slices of 2,500, just like that. So everything is nice and even here. As many of you already know, I do have OCD. So for the RSPs, it's very easy. If nothing's coming out of the account, it's very easy to track the performance. It's basically how much you put in, how many, this is, total contributions, how much I put in and or invested of my own money, and how much is your account actually worth. So this overall return here is basically the percentage difference between the two. So you see that my overall return, which is a lot lower than last portfolio Unveiled because of the general sell-off, 25%, Erica's at 31%. And for the Lira account, oh boy, I am down almost 50%. That's because of the Bitcoin just crashed, right? And all it has is the Bitcoin yield ETF. So another thing to keep in mind is that my RRSP account and even my Lira account, I consider these kind of YOLO accounts, you only live once accounts. So they are very aggressive. I like to have a little bit of fun with them and go for some more funky stuff. So if you're emulating or replicating me, because I know a lot of people do, just be careful and keep that in mind. Erica's account, on the other hand, I go a little bit more moderate, so there's just 5 holdings. So if ever you want to replicate and go with moderate risk, you could replicate Erica's RRSP. This is a much more balanced, and there's not much fun, there is no funky stuff in here. So let's go through the holdings one by one. So CLM, I just came out with a video on this. The video came out yesterday. So it's a great time to pick some up, although it's already starting to recover very hard. That's usually what it does after the rights offering. So CLM is a very aggressive closed-end fund that pretty much tries to mimic the S&P 500. If you look at what it has basically some top US stocks in there, blue chips mostly. OPP is primarily fixed income. It's managed by River North and Double Line. Double Line is the fixed income expert. River North manages RIV, which is here, the River North Opportunities Fund. So it has a little bit of equity and closed-end fund exposure, but it's mostly fixed income. So OPP is very down right now. So also really good pickup right now. It's trading at a big discount. Last I checked, it was like a 12% discount. SVOL. I really like SVOL. I have a video on it. Make sure to check it out if you haven't seen it. I also interviewed the fund manager. They actually just short the VIX, right? They short the VIX, and I'm surprising it's holding pretty strong considering the market has been selling off. So I'm actually very impressed by the performance of SVOL. No leverage used here. Keep in mind that the monthly distributions vary every single month. I forgot to mention OPP, they are reset annually at 12.5% of the NAV. So OPP, unfortunately, the dividend is set to drop unless the US market or the fund NAV recovers. Same thing for CLM. It's going to recover on the 31st of October, but I talk about it in my yesterday's video. CEFD, the eTrax monthly pay 1.5 leverage closed-end fund. I really like this ETN. It's 50% leverage, right? So it's very highly leveraged, and it gives you, it's an index that tracks most of the closed-end funds in the US market. It has over 100 closed-end funds. Planning to make a video on this and the other eTrax ETNs as well, so stay tuned for that. I got a lot of backlog videos to do, but this is my favorite one out of all the eTrax ETNs. Like I said, I think of it like an all-in-one closed-end fund solution. You capture all the closed-end funds on the US market with 50% leverage. You're looking at 13-14% yield, but right now it's more like 15-16 or something like that. So also a good pickup if you're looking for a broad closed-end fund, all-in-one exposure. Keep in mind though, it's very highly leveraged at 50%. So you can't stomach the leverage, don't invest in the fund. HGLB, a little closed-end fund that I've had for a really long time. I like the performance of this. Like OPP and RIV, it resets their dividend annually, but it's 8.5% of NAV. So it's instead of 12.5%. So it's not aggressive at all. It's very moderate. And I had a couple of good dividend increases, and this fund's been holding up pretty well. If you look at the objective of the fund, it's to not correlate as much to the US stock market. ORC, this is just mortgage REITs on a leverage basis. This is something that I probably would not invest or get something like this anymore because it's very niche, A, and B, it's a single company. I do not want to invest in a single company anymore. So I definitely will not sell it because I am at a loss. It's under $3 and my book price is $4.97. But they recently announced another dividend of 4.5 cents. So the annual dividend has been staying strong at 54 cents a year for the last couple of dividends. I'm making still over 10% yield, so I'm not going to complain. $140 a month USD. Once I do break even on this is something I will probably get rid of. Only when I break even on it. Very important. And probably swap it into something like CEFD or SVOL or something like that. SLVO and USOI are ETNs from Credit Suisse that focus on commodities and they write covered calls on. So SLVO is silver, USOI is oil. USOI has been on fire. The dividends have been extremely high the last couple of months. This dividend yield is not a joke, by the way, 55%. And of course, this is my annual dividend, by the way. So for the silver one, for the USOI, because they vary greatly, they're based on the average of the last 3 dividends. So silver is doing okay. The dividends, you could have 6 cents one time, then 4 cents, then 2 cents, then 12 cents. It's very random. USOI too. So these are very risky in terms of consistent dividends. They're so be cautious if you're going for some of these. I don't intend to add more to these. I consider them really niche and funky positions, even though they're very tempting. Trust me. Last but not least, my worst performer, of course, is the Ether ETF by Purpose. Ether Bitcoin has been taking an absolute beating. Once again, fear, right? There's a general sell-off, and with crypto, it's not like stocks where there's actual fundamentals. It's based on companies, and you could analyze the company's balance sheets and all that. There's zero fundamentals with crypto, and it's very new. It's a nascent asset class, so it's going to be very crazy, very volatile. And by the way, my 2,500 for June, this is where I put it. I added an extra 2,500 here, but I think the ETF is like under $3 and my book price is $5.62. So I do have an RRSP tracker tab. I know you guys like to see what I buy and sell every month. So for June, this is all I did is buy ETHY. I added 2.5K. So yeah, that's it for my RRSP. My Lira account only has the Bitcoin ETF. which also has been tanking. The dividends have been cut for both, by the way. And, I've been getting a lot of questions and worrisome messages about BTCY, ETHY. I'm personally holding them. Okay, guys, I'm not going to panic sell or anything like that. If you can't stomach the volatility, then maybe wait till they recover and get rid of it. But I would not do that. I would wait, because this is, in my opinion, the safest way to own Bitcoin and Ether. At least we're getting paid every month, although the dividends can be reduced, of course. But hey, it's still something. And even with the reduction, keep in mind, again, this annual dividend is based on the last 3 distributions. I'm still making over 14%. So we'll see what the dividend is for the next couple of months, because if it gets cut again, it will keep going. My 14% will probably go to 12% and go to 10%. But hey, at least it's something. I'm getting paid to wait. Erica's RRSP, on the other hand, much more moderate, much more conservative. It has 5 of my favorite funds on the US stock market: QYLD, RYLD, RA, RIV, and GOF. So QYLD, RYLD, and also XYLD, in my opinion, if you're an American investor that wants income, those 3 should be the cornerstone of your portfolio. So QYLD is the NASDAQ. Great pickup right now because the NASDAQ has sold off. RYLD is the Russell 2000. An index that tracks 2,000 smaller than medium-sized companies, so a great way to get the small and medium caps in America. And you could also get XYLD if you want. That's just the S&P 500. But keep in mind, it does have a little bit of overlap with QYLD. So these are the 2 biggest positions in here. I have RA, which I really like. That takes care of my real assets. So it's a closed-end fund on the US market managed by Brookfield, who's a real estate and infrastructure expert. And it has, by now it has maybe 12 or 13 or maybe even 14% yield. But typically you'll get about 11, 12% yield with this one. So all real assets: infrastructure, utilities, real estate, things like that, bonds or fixed income, and stocks as well. Really, really like it. RIV, kind of like CEFD, is what I consider an all-in-one closed-end fund solution. So it's a closed-end fund that invests in many other closed-end funds on the US market. Another one, by the way, similar to RIV and CEFD, would be YYY from Amplify ETFs. That one is a bit lower yield because it's not leveraged. CEFD is leveraged the most. RIV is in between, and YYY is not leveraged at all. So obviously, the higher leverage you go, the more your yield is. So RIV, I really like it. It also has a good percentage in SPACs in there. So really cool fund. I have a video on it. Make sure to check out my RIV and OPP video if you haven't seen them, where I talk about these funds in detail. I also have one for HGLB as well, by the way. GOF is that's been around for a long time. It's a leveraged fund that focuses a lot on fixed income. So it has a lot of corporate bonds, bank loans, things like that, mostly fixed income. Good annual returns, over 10% since inception. So really, really good. These guys, it's a big fund too. So this is where I get some of my fixed income exposure. Fixed income, I'm not that big of a fan. I would only get it if it's leveraged and it has high yield. So GOF and OPP is really where I have most of my fixed income exposure. And by the way, GOF is the smallest position. So those are the RRSPs. If you add up all the annual income, the monthly income together, 3858 US, 320, that's from the lira. So the BTCY is a Canadian holding. I'm looking at about 5142 in combined monthly income. So that 5142 is just being reinvested either via the drips or manually, and it's just compounding. And it will continue to compound in the next 10 to 20 years or so. So these are the RSPs. In a nutshell. Now let's check out the main portfolio, where I have my cash account, our 2 cash accounts rather, and our 2 TFSA accounts as well. All right, everyone, time to cover our cash and TFSA accounts. What you're seeing here is a combination of the 4 accounts together. So some funds, I have, maybe I have a little bit of HYLD, for example, in a TFSA, and then a little bit more in a cash account. So in order to see it better, this is the combination of all 4 accounts. So I switched the order. I changed the colors a little bit. I put it blue instead of red. I don't want it red. I kind of like the new color scheme. So we'll go through them one by one here. You'll see I have 16 funds. So my portfolio is getting leaner and leaner and leaner. And just one minor change for this Unveiled, and I'll show you that in a second. So let me just go through the sheet, how it's split up here. So you have the name of the fund, the stock symbol, They're hyperlinks, by the way, so if you click, it brings you to the fund's website. The sector of the fund composition, so just a one-liner of what kind of stocks there is. Total invested, this is how much money I put in, okay, not how much the fund is worth or my value is, how much my book costs, basically my book investment, weight of my portfolio, number of shares, my book price or my ACB, average cost base, my dividend or distribution yield, which is obviously based on my book price, and the annual dividend. Annual dividend, this is the annual dividend rate per share, and annual income and the monthly income. So what, if you add up the distributions all year, this is, HYLD, for example, gives me 9,000 a year or 752 a month. So let's go through each fund one by one, starting with the ETFs. I am down to 5 ETFs, 3 all-in-ones and the 2 crypto ones. So the 3 all-in-ones, let's go through them first. These are probably my 3 favorite funds of all time right now, or 3 of my favorite funds of all time. So HYLD and HDIV from Hamilton ETF. So HYLD focuses on the US market, and in there you have 7 covered call ETFs, right? These are covered call ETFs, or ETFs that hold covered call ETFs, and that use 25% leverage on top of it to enhance the total yield and return of the fund. Really, really like these 3 all-in-one ETFs. They definitely will be going forward the bread and butter of my portfolio. So it holds QYLD, RYLD, XYLD, 3 of my favorite covered call ETFs on the US market. I already, in Erica's RRSP account, she has QYLD, RYLD, XYLD is there, also the S&P 500. You have 2 ETFs, additional ETFs from Harvest, the brands one and their healthcare one. And a technology ETF from CI, TXF, and of course, the gold producers from Horizons, a gold producers, a covered call ETF from Horizons. So really, really great fund composition here. Does focus a lot more on the US, whereas HDIV focuses a little bit more on the Canadian stock market. So it has ZWB, ZWU from BMO. So you've got the big 6 banks, North American utilities companies, very defensive. FLI and NXF from CI. So FLI is the biggest 10 biggest North American life insurance companies. NXF is the big oil, basically the big oil and gas companies like Suncor, ExxonMobil, BP, Shell, Chevron, etc. HHL, you got your HHL is actually an ETF, or one of the an ETF that's in all 3 of these all-in-ones. HHL is my favorite ETF when it comes to healthcare companies. So Pfizer, Bristol Myers, Johnson & Johnson, etc. HTA, that's Harvest's technology ETF. So you got the best tech companies there, which basically is an equivalent to TXF. And then you have, again, HEP, which is the gold producers. I always like that HEP in there, the both Hamilton ones, because it's gold producers. It kind of gives you a little bit of a hedge there. Then you have HDIF from Harvest. This is the Harvest Diversified Monthly Income. So this is Harvest's version, and it has 5 Harvest covered call ETFs, also with 25% leverage. So it has HHL, HBF, HTA, HUTL, which is global utilities, sturdy global utilities, and HUBL, the 16 big banks. So really great way to capture the best covered call ETFs on the TSX with these 3. Figure out for yourself which one you like most. I will always own all 3 of them. I like all 3 of them, although there is overlap between. And once again, keep in mind, if you want to, you could download this portfolio in this Excel sheet and check it out yourself. So I am pretty much down on everything almost right now. So you could see the yields that I'm having here, but the yield right now on all 3 of these is much, much higher. So great time to pick some up. The Bitcoin and the Ether covered call ETFs from Purpose, although they crashed like 50%, I still like them. I'm still going to hold on to them. But 10% is my limit, everyone. You should always set yourself some limits on the higher risk, on the more niche covered calls, but my yields did drop significantly on them because of the dividend cuts, or the dividend reduction rather, in the last month. So keep in mind that this is based on the last 3 dividends. So it is possible that the yields will go down again in the next month and the month after that. So these are the ETFs that I own. Let's go through the closed-end funds now. So I only have 2 closed-end funds left. That brings me to the only change I did. I got rid of Inc.UN because it was a small position in my portfolio. I only had about 4.5K left in it. So I simply, I sold it off. Inc.UN was always an enigma for me. I never understood why the NAV or the stock price is so high compared to what it's actually worth. So that the NAV is like $7 and something, and the stock price is like $13. So there's always a big disconnect, which is possible for closed-end funds. But this was just, extreme for me. Plus, I was at a big profit on it, and it was a small position. So I just sold off my remaining 4.5K, and I reinvested the proceeds in more HYLD. So that's the only change I did this month, everyone. I wish I would be able to have, extra money around to invest. But my situation right now is that I'm currently saving a bit of money to maybe buy a second-hand car in Panama here. And either way, I have to focus. I have, for the rest of 2022 and the first 2 months of 2023, I will be focusing primarily to max out my RRSPs because it's the last time I will be filing Canadian taxes. It's for 2022. And this is why I'm going to be focusing a lot on my RRSPs to really balance out all the capital gains I accomplished or I gained during 2022. So I am very, very jealous for all of you who have cash and can buy really, really cheap shares. I wish I could, invest in HYLD, HDIV, and all that, but unfortunately I can't right now. But hopefully the market stays down for the next 2 years. I mean, that would be my dream. So I'll be able to invest further starting in 2023 in the cash account more. So closed-end funds. EIT, the Canoe Financial EIT Income Fund, my favorite closed-end fund on the Toronto Stock Exchange. It has a mishmash of 40 North American dividend stocks. This focus a little bit more in Canada. So this fund is always very, very consistent, pumps out 10 cents a month in dividend. DS focuses on Canada. It's DFN's twin brother, but it's not a split fund. It's just a regular closed-end fund. It has a unique distribution policy where it just follows the stock price. So every month the dividend changes. It's based on the stock price, 10% of the stock price. So this is one of the few funds that I'm still doing. I'm up significantly on, doing really, really well. And I have a really nice yield on it because, if the stock price is $8, well, the annual dividend would be 80 cents. It's 10% basically. I think it's at 81 cents now anyway, a little bit higher. So those are the closed-end funds, only 2 left. Now everyone's favorite, the split share funds or the split corporation. So I have 2 from Quadravest, DFN and FTN. It's Dividend 15, Financial 15. So DFN is the biggest split fund in Canada in terms of assets under management. It holds, just like DS, 15 of the best Canadian dividend growth stocks. So the 6 banks, Manulife, Sun Life, Enbridge, Pembina, Suncor, things like that. Really the best Canadian dividend stocks. It's been holding pretty strong. So anything Canadian focused like HDIV, DS, EIT, anything that has a lot of Canada, a lot of energy has been doing really well. DFN as well. It's really the US stuff that's really suffering right now. Things like HDIV, HYLD is suffering a little bit more, and that's why the RSPs, which are a lot more US focused, I am down a little bit more on than my cash and TFSA account. So FTN has 15 North American financial stocks, all blue chips, by the way. All, almost everything in here is blue chip except for the 2 crypto ETFs, by the way. Very, very, very conservative blue chip holdings here I have, even though you're getting them with leverage, right? So always forget, most important part is always the holdings. They also have FFN. So FFN's been getting a lot of action in our group. Do I sell it? Do I wait? So guys, you have to remember that for split funds, you have to be ready to miss dividends, especially on the higher risk ones where the unit NAVs are usually close to $15. Because as soon as there's a market correction, something sudden, remember that these funds are leveraged, so they will go down a lot harder. So FFN is under $15 unit NAV. Also, Dividend 15 too, stock symbol DF, is down under $15 unit NAV. So should you wait? My opinion, the silliest thing to do if you have FFN is sell it at a loss just because the dividend stops. The dividend will restart eventually, everyone, and keep in mind that all the covered call income, the excess dividend income, will stay within the fund to rebuild the unit NAV over $15. So in my opinion, you have to take that in consideration when investing in split funds. This is why I always say don't invest only in the higher risk split funds. And this is why you see personally, I don't have DF. I don't have FFN. I'd rather have DFN and FTN where their unit NAVs are a bit higher. You know, they're at 16, 17, 18. So there's less of a chance to miss dividends. And so far, they haven't missed yet, but you know, we'll wait and see. The next ones are from Brompton. Probably I would say my favorite split fund provider. They have really, really good split funds. So LBS holds the big six banks and the four life insurance companies. It's been holding strong. SBC has just the six banks. This competes with BK from Quadravest. I like SBC better, but if you want something more aggressive, BK is more aggressive. So these ones are still paying out unit NAV above $15, no problem, especially SBC. SBC is a really, really low risk one. You know, LBS, FTN are kind of on the same risk level. I would say medium. Even DFN's a bit, you know, I would say medium risk, although the good thing about DFN is it's diversified, whereas FTN and LBS is only financials. GDV is my favorite split fund of all time just because of the super cool diversification. So it has regional diversification and sector diversification. You could kind of tell, right? It's my biggest split fund, or one of my biggest, sorry, and the biggest one is RS. So it's still over $15 unit NAV, no problem here. DGS, now DGS, the latest figure shows $14.99 of unit NAV. So if it stays that way, if it doesn't go past 15, and Brompton usually declares the dividends in the third, you know, it should be any day now. I'm filming this on the 23rd, so it should be today or tomorrow. It is possible that DGS stops missing dividends. So DGS is really DFN's competitor. It has the best Canadian dividend growth stocks, but it has a lot more diversification than DFN. DFN's a little bit more concentrated. DGS has, you know, more variety of stocks. They have some consumer staples in there like Loblaws and other Canadian growth stocks. So again, guys, things like DGS, you know, I would consider this a medium to high risk split fund. And by the way, when I say risk, when in terms of split funds, it's not regarding the stocks inside, it's regarding missing dividends. So the general rule of thumb, everyone, is the higher the yield, the higher the chance there is to miss dividends. The lower the yield, the lower the chance. So it's up to you to figure out which ones suit your taste and which ones don't. If you have a strong stomach, you could get the higher risk ones. If you don't have a strong stomach, don't get them. Just get the ones I consider lower risk, right? It's all about risk reward, but it's not the end of the world if a split fund misses dividends. Don't forget that. And it's actually the best time to buy them is when they go under $15 unit NAV, because what happens is people mostly panic sell them because the dividends aren't going to get paid out, so they dump them, and you see these big declines. And you actually see this with DGS, right? FFN, you see big declines, and then you know, so it's actually a good pickup because the NAV gets closer to the stock price, because usually, you know, closed-end funds, or especially split funds, all trade at premiums, but when there's a panic sell, they usually get a lot closer, right? So it's actually a great time to pick them up. But just, you know, a word of caution on which ones you get. Keep in mind, this is going to be a great learning experience for you as well. You'll know which ones, you know, you could stomach and you don't, but I would not panic sell any of them. That's my overarching advice. PWI is the last one from Brompton here. It's the Sustainable Power and Infrastructure Split Corporation. I'm a little bit, you know, it's 1650 unit NAV. I thought it would be a little bit stronger because it has mostly utilities and green energy stocks, but I guess even PWI is not immune to a market sell-off, or utility and infrastructure stocks are not immune to market sell-off. So luckily it's still over $15 unit NAV. We'll see what happens. This is actually the one where I'm getting the lowest yield on. And the last two from Middlefield, really love these ones. So ENS, which is just Enbridge, unit NAV is very strong. I have no fear for this one going under 15 whatsoever. Same thing for RS. RS just did a overnight offering because it was trading at a big premium. So it's still $23, $24 unit NAV. As long as the unit NAV, in my opinion, if it's over $20, I consider it a fairly safe split fund. And RS is actually a pretty good pickup right now if you need real estate exposure in your portfolio. It has the 15 of the biggest Canadian REITs in there. So a really good way to get real estate exposure. So total monthly income I am making here. Let's go through the totals here. So I'm making $57.32 a month Canadian, a little bit lower than last month. That's mostly because of the lower dividends on the covered call Bitcoin and Ether ETF. So total invested is $624,000. So if you combine my total invested for my TFSA in cash account and my RRSPs, which are here, right, the total contributions, the total investment for the whole portfolio is about $912,500, and the total value is about the same thing. It's about $913,000, right? The value. So I'm pretty much neck and neck, but again, not like I care, but I just wanted to share that information for you. But keep in mind that the portfolio value doesn't count all the passive income that has been extracted from the TFSA and cash account. So as of the end of 2021, I've extracted a total of $137,400 of passive income from my TFSA and cash account. So I get keep getting the question all the time, do you drip, do you don't drip? Well, the RRSPs, I do drip, everything's reinvested, right? Either on drip or on manually for my RRSP. And for the main portfolio, there is no drip. So our two TFSAs, our two cash accounts, there is no drip. We usually extract all the passive income. So you got to consider that as well, right? You got to consider the income as well. This is a cash flow portfolio. The goal is not to increase the portfolio higher and higher the value because you're going to sell it. It's really to increase the monthly passive income. And so far I made $137,000. But that's as of June 1st, 2022. I didn't count the 2022 extracts yet. It should be more like 170 or something like that. So always remember that. So that is my portfolio in a nutshell. As you could see the percentages according to each type of fund and where the income comes from as well. And again, keep in mind you could download this portfolio on my website. It also comes with this tab here, a blank portfolio. If you like my portfolio template, you could use this as well. So there you have it. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys where I ask the audience, I ask you what topic you want me to cover next. So very important, subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.